Hey, what's up traders? In this video, I want to show you guys a few things I've been working on. The first thing is the latest version of my ultimate pullback indicator, which you see on my chart right now. This is a tool for developing pullback trend continuation strategies. I've made a ton of improvements to the script over the past few weeks, and I'm publishing them today and recording this video to explain how everything works. However, this is a premium script that requires a subscription to access. So before we begin, I want to show you guys some free stuff that I've put together. So to get this ultimate pullback indicator working with all these strategy stats and correct fixed fractional position sizing, things like that, I had to update my open source public free ZenLibrary to include a bunch of new functions. So if I come down to the source code here, there'll be a link to this below in the video description. I've tidied up this script a lot. I've fixed all the commenting, so the code hints will now work properly in the Pine Script editor for each function. This library just contains a bunch of functions I use in my own scripts regularly. Things like converting pips into whole numbers, detecting candlestick patterns like hammer candles, star candles, dojis, etc., engulfing candles. There's all kinds of strategy helper functions in this script. The latest changes down the bottom here are the strategy helper functions. So I've added a whole bunch of different functions. Most of these you can get just in the actual strategy library inbuilt into the editor or into the Pine Script syntax. But there are a few here that you can't get from the inbuilt strategy functions, such as the realized max drawdown based on realized equity instead of open equity, like the strategy tester calculates that on. Your total pip return over the backtest period, long win count and short win count separated, as well as losses, break even, total count of each type of trade, your long and short win percentage, break even percentage, average risk reward over the backtest period. And then this is the important addition to the library. This units to lots will convert your position size from units into lots. So what does that mean? I'll show you. Right now, my position size here is a short trade trading 85,565 units, which is about 85% of a standard lot. A standard lot in Forex trading is 100,000 units. If I wanted to convert this into lots, so most brokers only accept lots. Oanda, the broker Oanda, allows you to trade in units, which is really handy. I wish all brokers offered that feature because it allows you really granular control over your position sizing and risk management. But most brokers don't allow that. The minimum size you can usually get is a micro lot, and that's multiples of a whole number. So if I come down here to my backtester settings and click use lots, that's going to use my ZenLibrary units to lots function. And watch this number here, it now becomes 86,000 units, which is rounded to the nearest lot size. So that's included in my open source ZenLibrary. And then next up we have our fixed fractional position sizing. I'll go over this in more detail later on in the video, but basically what this allows us to do, or allows me to do, is risk a percentage of my account balance on each Forex trade based on my stop loss. So if I have a 10 pip stop loss, and I want to risk 1% of my account so that when that stop loss is hit, I lose 1%. This is the function I use. And my new ultimate pullback indicator is, or the new version of this indicator is utilizing that feature. So if I come up to the backtester settings again, and I turn off use fixed fractional position sizing, I'll turn use lots off as well. Watch my metrics up here. These are my return metrics, my performance metrics. Suddenly they're all out of whack. The reason for that is the strategy tester order size, position sizing is broken for Forex. It's basically broken. It's almost useless. The only thing we can do with this is risk a fixed position size. So for example, one standard lot per trade, regardless of how far away my stop loss is. Sure, that's profitable, but my risk is out of control with this. My drawdown's doubled, so did my return, but I don't have a granular control over my risk. When I'm risking one standard lot, no matter how far my stop loss is, see I've got a 21 pip stop, a 25 pip stop, a 20 pip stop, I'm risking different amounts of loss per trade based on the distance of my stop loss with a fixed position size. I don't want that. Sure, it works nicely on this pair, but on most pairs, it's not going to work well, in my experience. Depends on the trading style. Some systems require a fixed position size. That's why I made this an option and it's not a default override. But if I turn fixed fractional back on and we look at the strategy tester results, you can see in this column here, our cumulative profit, we're losing 1% of my account, 1% of my account, 1%, a bunch of losses in a row here, and then a winning trade of 2%. So I've got a 2-to-1 risk reward on this current setup in the settings. And we take a bunch of losses, but they're all constrained to 1% regardless of how far away my stop loss is. If you look in this column, we have my pips here, 41 pips, 69 pips, 38 pips, all losing 1% of my account balance instead of a arbitrary number based on my fixed position sizing. So that's the latest change in the library, this new function. There's an example of how to use this function here. I'll be covering this in future videos. So I'll show you guys in more detail how to use this particular function. It's particularly obviously in Forex trading strategies where this is most used. We also have some Monte Carlo trade features here. So now the ultimate pullback indicator has trade skipping, random trade skipping. So if I come down to my backtested settings yet again, and I look for Monte Carlo skip percent, I also have Monte Carlo spread. This will randomize the spread and or skip trades based on a percentage I input here. So the spread will simulate real spread. Again, the strategy tester in TradingView is broken for Forex trading because the spread is not fixed. Trade Nation, a new broker on TradingView, actually does have fixed spreads, which is amazing. I just created an account with them. It's not a recommendation or anything, but check them out if you're interested in that. It's pretty cool. It's very rare to have a broker offer fixed spreads in Forex where your spread never changes no matter what time of day it is, no matter what liquidity is at. It's pretty cool. But most brokers don't allow that. Most brokers have variable spreads, which change a lot during the day, especially if there's a volatile news event or it's thin trading, like early in the morning. And this slippage input for the strategy tester is a fixed slippage spread, which is useless. It's completely useless because, and I'll explain why. If you know your slippage is going to be X amount of ticks on every trade, you can just adapt your system to shoot for slightly more profit or widen your stop loss slightly to make up for that. It negates, having a fixed slippage negates slippage altogether. It's not accurately simulating the randomness, the random impact that real slippage can have on your account, a variable spread. And so what I've done with my script is I've added a Monte Carlo spread. I'll show you what this does right now. If I set this to, let's set it to a high number so it's very obvious what it's doing. I'll set it to 5. So now we have a variable spread of 5 pips on every trade. And let's have a look at how that looks. Here's a good example. Let's zoom in here. Have a look at this. Now, our exit should have been at this green line if we weren't simulating spread. But you can see my exit is just below that green line. We are exiting, let's get the measure tool, 1.6 pips below my actual fixed profit. And that's going to affect my results, just like real life would. Same with my stop loss. If I find a losing trade, here we go. On this trade, we lost more than we intended to. Now this jacks up my strategy result returns because sometimes the spread will be closer and our take profit will be closer, and that's going to affect our risk reward. In this case, it actually affected it positively, but that won't always be the case. And that's why I also included some settings here to force the Monte Carlo spread to only be negative, so only affect trades in a negative way and only affect our take profit or stop loss. So you can play around with these. Let's say I only want my stop loss to be affected by spread. There we go. That negatively affected our risk reward quite a bit. Still profitable though, and that's the point of, or at least in theory, this isn't trading advice, this is purely example purposes, but theoretically, I haven't put commission yet into this simulation. That will affect things quite dramatically, but in a vacuum, these settings, even with the Monte Carlo 5 pip variance, which is unrealistic, that's quite high. Normally it's closer to 1 or 2 pips on average. At worst, if you've got a good broker, that is. And we still have a profitable system here, theoretically, even with that randomness introduced. And now if I add in random trade skipping, let's add a 10% chance of a trade being skipped at random. So now we can see how robust the system is based on the introduction of uncertainty, randomness. The danger with backtesting, especially single market systems like this in the strategy tester on TradingView, is curve fitting. That is massaging our system to perform really well on how price unfolded over the past few years without regard to the fact that markets change and conditions change and the future will not be exactly the same as the past. And so by introducing some randomness here, here's a skipped trade. This would have been taken by this script. This is a valid pullback trade with a valid candlestick pattern. We would have entered here with a stop loss here, probably would have been a losing trade, but that's the point. We're skipping randomly. We're not skipping winning trades or losing trades. We're just skipping any random trade, and the system is still profitable. Even with a 5 pip spread and 10% of trades being skipped, we skipped 27 trades out of this sample size. We still have a viable trading system. I haven't introduced commissions yet, but we'll cover that later in the video when I go into the UPS stuff specifically. But hopefully you can see the power of these new library features. Again, this is built into the public open source library. You guys can use this in your own scripts. I'll show you examples of how to use this in future videos. But for now, the last thing I want to show you guys and mention is the latest version of my PineConnector library, where I've made a bunch of changes to, let me find it, here we go. So this library is used for automating your TradingView strategies through MetaTrader. So it's a bridge between MetaTrader and TradingView. Any alerts that trigger will send this string to PineConnector over on MetaTrader and execute trades automatically, so you can trade while you're sleeping. I've been using this for a few years now, on and off. I've currently got a small portfolio of systems trading, the UPS, my ultimate pullback strategy, and it took a few trades this week, so it's working as expected. And that script is using this library, the PineConnector library. I've shown you guys this on the channel on a recent video. I'll link to that below in the video description. There'll be links to all of this stuff below. But the latest change I made to this library is that it now just generates alerts when you call the function. So again, this is completely free open source library. It's a massive script. Most of it's commenting and explaining the parameter usage, but this is completely free open source for you guys to use. And the way it works now, for example, let's say we want to open a trade. I'll come over to my ultimate pullback strategy source code. This script is not open source, but you can buy the source code on my website if you're curious and interested. I've sunk thousands of hours into the script, so this is the only script I actually don't give away for free, or one of the few scripts I don't give away for free, because I've sunk so much pain and suffering into getting this thing to work the way I want to over the past several years. But anyway, a lot of these functions, these features in the libraries are free. So if I come down to where my entry code is, here we go. Here's my PineConnector checks. I'm simply just calling pc.buy, and that will trigger an alert from my PineConnector library with all these parameters. So my PineConnector license ID, the risk per trade, my stop loss, target, break-even, offset, spread filter, account filter, and so on. That's all handled with this library, which again is completely open source. Links below in the video description. The final thing, the last thing I want to mention, is that my ultimate pullback strategy now also comes with yet another open source feature that I'll show you guys the source code to in a moment. Down here, the monthly performance table. If I turn this guy on, keep an eye down here, this table will disappear, and we'll now get a monthly breakdown. Let me reset all my settings to default here. Here is my new and improved monthly performance table. So this thing is breaking down the performance of the strategy in percentage terms, percentage of my account balance over the past backtesting period. So the first trade this system took on this chart, based on my TradingView plan, the amount of historical data I have access to on the 1 hour chart. The first trade it took was in January of 2020. And this is breaking down the month-on-month performance from January 2020 until today. So this is the 1st of August today. We have taken no trades this month, so we have a 0% return. But if I hover over these last few months, like last month, we had a 8% return in July. And if you look at max drawdown, we had 0%. So that means we must have had 4 winning trades last month, because we have a 2-to-1 risk reward on these settings currently. We have an 8% max favorable excursion with 0% drawdown. That means we had no losing trades last month, which is obviously rare. And we ended up making 8%. You can see here we were up 10.8% on the year with a 7% drawdown this year. We have a compounded annual growth rate of about 12% over the past 4 years or so, 4.5. A MAR ratio of 1.12, which is pretty good. As you can see on that tooltip there, 1.0 and above is very good, and anything 3.0 or above should be considered suspiciously good. But this system's not bad. It doesn't perform this way on every currency pair. Full disclosure, this is an outlier. I did cherry pick this example just because it gives me a good way to show the capabilities of this script when it's doing well. But given how many settings are in this script, and I'll go over all the settings perhaps in a second video because this video is already long enough. There's a lot of settings here. We have all kinds of exit reasons. We have all kinds of entry reasons, candlestick patterns, conditions, indicator conditions that can be turned on or off. Typically, the way I trade this, I only modify a couple of settings at a time. Just because these settings are here doesn't mean you should go wild and tweak every single one of them. That's a bad idea. It can be done, but it's a bad idea because of the curve fitting issue. I'll go into that in future videos on the channel when we get into more strategy related content. But the way I trade this is with the default settings, a couple of tweaks here and there. And yeah, there are a ton of settings to play with. And anyway, if I hover my mouse over any month here, you'll see the month by month play out of this system. So for example, here we had no winning trades. Max MFE stands for max favorable excursion. We had no MFE for that month, which means we had 3 losing trades that month. Let's look for the worst month over our backtest period. That'll probably be this 6-month losing month. No winning trades, 6 losing trades in a row back in June of 2022. Hopefully now you can see the value of this monthly performance table. Again, this is open source. It's completely free. I'll leave a link below in the video description to this script. It is code that you have to copy and paste into your script. If I come down here, I literally just pasted this code into the bottom of my strategy script in this case, and it just worked out of the box. I didn't have to tweak anything. It works off the inbuilt strategy functions. And so some scripts that won't work for if you have complex and exotic methods for entering and exiting trades. If you're pyramiding, I don't know if it works well with pyramiding, but with a simple 1-in, 1-out system, this works great according to my testing. It even shows you drawdown bars here. So we were in drawdown for 66,000 hours. I don't know how many days that is. I just did the math. That's 270 days. So that's nearly a full year of drawdown, which is honestly to be expected. No system is going to be profitable every single year. You are going to encounter times where a system doesn't perform for up to a year. That it's not uncommon. That is why, personally, I trade many different systems over many different time frames, many different markets. I trade the stock market, crypto, and Forex. I have about currently six different systems on the stock market: mean reversion, trend following, momentum. With Forex, I tend to stick to intraday time frames because that's its strength. I have access to high quality intraday data, and I can automate these systems with PineConnector. So I like to automate my Forex trading. Crypto is a bit more long-term for me. It's more position holding. And between them all, if one's doing poorly, usually one is doing well, or a couple are doing well. And so the point isn't to develop a perfect system that never has a drawdown. It's to have several systems that are all working together in harmony, helping each other through bad times. When a market's trending, mean reversion systems aren't going to do well. And when a market's in a bear market or consolidating, mean reversion will do well. Counter trend systems will do well. So having all of them in a basket of portfolios is how I smooth my equity curve, not through the fool's errand of trying to develop the perfect system that never loses a trade or has a losing year. And the whole idea with this ultimate pullback indicator is not to find one market that performs really well. It's to find several that perform acceptably well and export that backtesting data into a spreadsheet so that we have 6, 7, 8 different pairs that are all trading the same system, ideally. You can mix and match time frames and markets, that's fine, but it's pretty advanced. There are pitfalls there that you need to be careful of. But generally speaking, the way I like to trade this is I come up with some settings. I come up with several pairs that I like the look of, that seem robust, where the Monte Carlo testing doesn't break the system, where the parameters aren't super sensitive and tweaking a moving average length to 40 instead of 50 doesn't break the system. Once all that meets my criteria, then I just switch on a bunch of alerts and I just have this automating a PineConnector account. Perhaps we'll cover that in future videos. I've already covered exporting TradingView data to spreadsheets on the channel. I'll see if I can dig that video up and leave a link to that in the video description as well. But in the Ultimate Pullback Indicator course and on my course website, we'll be covering that in more detail in future videos for sure. Anyway, that's it. The link to this performance table will be in the video description below. The link to my Ultimate Pullback Indicator, if you're interested in that, will be below, along with the link to the source code and the course breaking down the source code to every script I've ever made. All of that will be below in the video description. So just to recap, there are 3 free resources here. We have my ZenLibrary with a whole bunch of new strategy helper functions in it. We have my free PineConnector library that will help you automate your TradingView scripts through PineConnector. And we have my monthly performance table here. And the 4th bonus resource is that this Ultimate Pullback Indicator comes with a 1-month free trial. So if you are curious about it, go and check that out. Sign up for a free trial. See if it's something you like. I did halve the price recently, so it's a lot cheaper than it used to be. So if you like trading pullbacks and you don't have the time to sink hundreds and hundreds of hours and years into developing your own Ultimate Pullback Indicator, then come check mine out if you're curious. If not, that's fine. Make sure to subscribe to the channel, stick around, because in future videos we'll be using these new functions, these new libraries to build out TradingView strategies, particularly Forex trading, now that we've got that fixed fractional position sizing code that will really help backtest more effectively on the TradingView platform. I hope you find these scripts helpful and the code helpful. Once again, everything will be below in the pinned comment and video description. Take care, best of luck with your trading, and I'll speak with you in the next video. Goodbye.